The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the DAX like we always do. As you can see, we had that big run up over the last few days. We had a little bit of a pullback. We were a little bit lower earlier, but now with the rally that we have going on here in the stock market, we're probably turning around here a little bit. I don't expect the S&P to get above 2370 today, but that's just my expectation. There should be some pretty good resistance between 2367 and 2370. That's, just looking at some of the expansion patterns that are up here. But, there's always that possibility given to the fact that the NASDAQ is always running and it's very near a new high again. So we'll see if that's going to pull the market up with it. And along with Amazon. Amazon is the only stock that will never go down. It has defied the Isaac Newton's second law of motion. Okay, folks, let's quickly look over here at some of these patterns that we're watching. Someone asked me a question about how do you know when a pattern fails? That's real simple. When you start losing money. Let's just take a look here at something we were watching just the other day. Now, this is hogs. This is July hogs, and they're coming into delivery now. So you should be trading June hogs. But you can see the July hogs, the April hogs made a perfect ABCD pattern down there at 64. They rallied about 2 cents, which is about $800 over a 3-day period. And then they had a really bad day down. And then yesterday they were down again. Well, yesterday, if you were in that trade with a 2-point profit, you wouldn't want to have given all of it back, maybe some of it. But, that's $800. And if you're only risking $600 on a trade, you certainly don't want to give all of that up. So you have to use some common sense here, because once the markets work, they usually work right away, and they'll give you a pretty good profit. That's the bottom line of what we're looking at. Okay, someone in the den has asked me whether I have met Johnny Carson. Yes, I met Johnny Carson on several occasions, as did my family. When we were in Los Angeles, we had a good friend who was at NBC, and he was the lead cameraman on the Tonight Show, and so we could get free tickets anytime we wanted to. We didn't have to wait in line. All we had to do was show up. And Mr. Carson is a real gentleman and really liked children. My kids were really little at the time, and he certainly liked to be around little kids. Anyway, getting on to some other things here. Let's just take another one here. Let's take another one that we looked at. We want to watch failures because you learn something from your failures, as always, of course. And we'll discuss that in just a second. But just take a look here. This is the German Bund. As you can see here, we were right at the 61% retracement last week. And then as we came in Monday, we took off to the upside. Once it does that, it almost, it's telegraphing that it wants to go to at least the 78% level. And that's, in fact, what it did yesterday. So remember, that's the one thing that pattern recognition tries to help you with, and that is when these patterns fail, you don't want to stand in front of them, folks. So you could take a little bit of a risk, and then if you're wrong, you take a look at it again. The worst thing you can do is do something like Jim Chanos is doing in Tesla, and from what I understand, he's still short the stock. Well, we don't know for sure. He's a pretty private guy. Or David Ackerman with the Valiant. Get out. There's no mistake in being wrong. The mistake is in staying wrong. There's a lot of opportunities, and if you can try to be right about 6 out of 10 times, you'll usually do relatively well. That's the bottom line. But don't look for a holy grail here. We look at some astrology. By the way, we're going to have Norm Winsky on at the break today. He's going to share some of his tidbits of information, which is, quite a bit. So we want to watch that also. So keep in mind that these patterns do fail, and when they do, you literally have to stand aside. I wanted to put up the chart of the June hogs just to prove my point. The fact that we had that really good rally right off of the 61% retracement, and then it looked like it was going to go higher, and then we had a 3-day rally, and then of course it gave up the ghost, and then you have to stand aside and wait for the next pattern. Now, a person that is trading fundamentals might do it totally different. They might think that hogs are fundamentally sound, and they might be willing to buy those, add to positions on the way down. Well, that never worked for me. I've never seen it work for anybody else. And one of the things that makes the June hogs are holding some support, but frankly, they have some upside, but you've got to wait till they start to go up. That's the way it looks like from here. But if you're adding to a losing position, you are making the most serious mistake that you can possibly do. If you ever read the book by Jesse Livermore, Reminiscence of a Stock Operator, he talks about that in almost about 3 different chapters. Also, if you read the book by Bernard Baruch, his autobiography, My Own Story, he said that is the single most insane thing that a investor can do is add to a losing position. If you stop and think, it's correct, because if you're adding to a losing position, your original premise on the trade is wrong. It's not going up, it's going down. And the second thing that you're going to do is you're going to increase your risk exposure by double your amount. And so that's not good. I don't. I know some people do it with some success, but I have to go with the old masters, and from my personal experience, believe me, that never worked for me. In fact, folks, I've always said this: the number of times that I've added to a losing position that it worked, I can never remember one. I did that in my earlier days possibly, but not since the 70s did it ever work. I mean, I guess I've blotted it out, but that's neither here nor there. Okay, we've got to take a look here at the euro. We were watching this yesterday. Went down to the exact 786 retracement. The thing is, we haven't rallied very much. We've only been able to rally about 55 to 60 pips. So, it's a very, very small amount of the rally. So if we go below that 106.30 level now, that would be a relatively small risk at that point. So we watch this one with a little bit of anticipation to see if it's going to work. Okay, now we will take a look at. I wanted to watch one that looks real interesting right now, folks, from a long-term perspective, and that is the July soybean. This is soybean meal. July soybeans look exactly the same, but we're setting at major support here in soybean meal down at this 307, 308 level. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to take a quick look here at the Japanese yen versus the U.S. dollar. It's getting a lot of news play today, but we're having a nice little over 100 pip rally now off of the bottom. There should be very strong resistance in the dollar yen here at this 111.30 level. As you can see here by the dollar index chart, the Japanese yen chart, which one did I post? Are you kidding me? Oh dear, what did I do wrong? I think I posted the dollar index. No, I posted the Japanese yen chart. Okay. Anyway, we're coming into some pretty strong resistance up here at this 111.30 level. If you looked at this on a shorter term hourly chart, you'd be seeing an ABCD pattern that also completes there at the 111.30 level. Evidently, they don't see it, so that means that the old cowboy somehow missed it. So give me a second here, and I will get this up. And we will look at it very, very shortly here. And it won't be too long. Just give me 1 second. 5, 4, 3. Here we go. We'll be ready in just a second here. And then you'll see here, there's where we are right now. And let's just do this since we're working here together. Let's just take a look at the 30-minute, and you'll see this really nice ABCD pattern that is here. Also that looks very, very interesting. So we'll put that in here to let you take a look at it. But see, we're in a bear market, and this is pretty much what should happen to it as far as the downside. The 61% retracement of this comes in a little bit higher at the 111.43 level, so another 20 pips higher is what I would be watching on the Japanese yen, because this is still in a downtrend. Now, if this gets above the 112 level, then all bets are off. Then you'll be looking at something that could be really a lot more dramatic. But we're looking at that dollar index that we've had several times over the past. and that still looks like it has the potential, to get down to that 107 and change, 97 and change level, but it's still a bit early as we look at these things. Someone's asked me a question about why do I show patterns that fail? Folks, that's how you learn. If you've ever had a child that rides a bicycle, for heaven's sakes, they get on the bicycle and they fall over the first 10 or 15 or 20 times. That don't mean they stop. They just get more excited each time until they finally learn to ride the bike themselves. And that's the same thing in trading. You've got to get back onto the old, the computer and do the clicking. It used to be the telephone, but now it's electronic. You're basically just like a floor trader now. You have all the advantages that you have as a floor trader. You don't have the advantages of a specialist because they see the deck ahead of time, but you certainly have all the advantages of a floor trader. That's pretty much what we're looking at. Okay. All right, boy. You guys are too funny. All right, let's take a quick look here at the gold market. Yesterday, we went up and we made a little bit higher high up at that 1263 level. We could not get above the old high at 1265 and change. Now we're pulling back to a 61% retracement of the previous day's range down here at the 1250 level. Whether this holds or not remains to be seen, but that is a very small pattern because you're only looking at 2 days, but that's how the markets respond. Someone's asked a question to take a look at the bonds, and we will certainly do that right now. All I have to do is to put it up here and take a look at it. We're still about the same price here. We've had a move. We went up to that level yesterday. Give me 1 second here. We want to put this up because we did get back up to that 152 level one more time yesterday. Then we came down very hard after that, and we've been down as low as 150.07 today. 151.07. So it's been a big move. We've broken out to the upside. Now we're pulling back, basically what this looks like. So I believe we're heading lower in the bond market, but I could be wrong because I'm wrong quite a bit. The reason why is it has fulfilled some of these patterns that we look at, primarily the 135 pattern that we look at so often. So that's what I think about the bonds. The notes look a little differently because they had a big, the jobs report coming out. We have non-farm payroll coming out on Friday. That is one of the big daddy rabbits of all the reports. You want to wait till after that report comes out. So we'll see. And believe me, the reports that come out, as you can see, I don't know how anybody can believe anything that comes out of Washington. Honest to God, everything that seems to come out of there seems to be tainted some way or another. Now we have Jeffrey Lacker from the Richmond Federal Reserve giving information to a hedge fund. Wow. Boy, I never would have expected that. I don't know if you folks remember this or not, but when Mr. Greenspan was chairman of the Federal Reserve, his closest and dearest friend, who they vacationed together and everything, was Robert Rubin, none other than the CEO of Citicorp. And strangely enough, Rubin would fly down to Washington to have breakfast or lunch with Mr. Greenspan several times a week. I'll bet you they didn't talk about the markets, though. I'm almost sure that they probably talked about their children and grandchildren, but who knows? Politics can be a pretty tricky thing, as we see. Okay, we've got a question from Jay, and are you there?
Hey, hi, Larry. Good morning.
How are you? What can I help you with?
Unusual question. I got a friend who's going to meet with a guy guys put out a newsletter. He and his brother put out a newsletter since the 90s. Pretty successful fundamental trader. So my friend's got a chance to pick his brain and ask about stocks, about investments. And I was wondering, if you were in his shoes, with your experience and your eyes, what would you ask him? What do you think would be a smart question or questions to ask someone like that?
Ooh, boy, you're in an area that I know nothing about as far as the fundamentals. I really don't. The first question I was asked is if they do any technical analysis to go along with the fundamentals. That would be the first question that I would ask, because I believe that the markets are pretty fair overall. And, if you see prices going up, there's more buying. If you see prices going down, there's more selling. That's primarily, the way I look at it. But boy, the fundamental part of it, Jay, I gave up on that 40 years ago. I never wanted to look back, and I haven't. So all I do is look at the charts. They do confuse me at times, sometimes more than I want to admit. But, that's the way I see it, because they can't hide from you on the charts. If prices are going down, there's just more selling. If prices are going up, there's more buying, and that's what I think. So I would ask the person if they do any technical analysis, but you see, I'm biased. You should ask somebody like Basil. Basil would probably know more about that, because I think Basil has looked at fundamentals a lot more than or Tom O'Brien. Tom O'Brien would be a good one to ask, but it's not me, because I really don't know anything about fundamentals.
Yeah, but that's a good question, because that supports his credibility if he does employ technical analysis. It would make a lot of sense if he said that, because then I would personally, if it were me, I would say, well, this guy's looking at all different areas of the market. I work with a very large a group of farmers. Well, stay with us, Jay, and we'll be right. Well, we got Norm coming in, so I'll catch you later, okay, buddy? Alrighty. Call me at home if you need to ask any more questions. I'll be more than happy to answer them. Terrific. Thanks, Larry.
Okay, yeah, stay tuned for Norm Winsky.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our good friend from Astro Trend, Norm Winsky, on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you, and a happy April.
Thank you.
Hey, listen, we would like to start the show, and why don't you go right ahead? But before we do that, last night we were chatting about Uranian astrology and Vedic astrology and all of that, and you told me that you basically use the classical astrology, and I can certainly understand that. So could you tell the folks basically in just a nutshell the difference between Vedic astrology or Uranian astrology and what you do?
I don't know hardly anything about Uranian astrology. I know that Vedic is the Indian system, that they're going based on where the constellations are, not the signs. And there's a difference between Western astrology and Indian astrology of about 23 degrees. I could show you statistical. I did prepare for that. But I can show you statistically where you go look at your seasonal patterns on these commodities, where they line up with the different, where the sun goes through the different signs during the year. And just for example, the seasonal for gold is July 23rd. And just right around there is when it usually mixes low. And that's when, by Western astrology, that's when the sun goes into Leo. But the Indians are 23 degrees off. So that's wrong.
Okay, that's good. Let's get on to the stuff that works, my friend. Fire away.
Yeah, well, that's what I had in mind, to show people how to make some money.
Okay, go ahead.
So every month in my letter, what's that again?
Go ahead.
Yeah, so every month in my letter, I review the previous month. Late in February when I was on your show, I think in early March, I mentioned, because it kind of landed between my letters there, we had Venus turning retrograde. What is retrograde? It's part of two of what's called station points. That's in the same category of things. What is a station point? Station point is due to the relative motion of the Earth as all the different planets go around the sun, different speeds, just like you're driving your car and you're doing 60, somebody passes you doing 70. You look out your side window and you may get the impression that you're actually going backwards, even though intellectually you're going forwards. Right? So that's what happens when you look out in the night sky. If you plot the planets, it will look like, on occasion, that a planet would stop its motion and then reverse its direction. We know physically they are not doing that relative to the sun, but to the Earth they are. Okay? It's all relative motion. Einstein talked about that being on a train, relative motion, right?
Yep.
So when the planets stop relative to the Earth, they look like they stop momentarily, then they reverse the direction. When they stop, that's called a station point. They stop to go forward, that's called direct, and they stop to go backwards, and that's called retrograde. Okay, so one of the principles I've developed over the many years is that when the ruling planet associated with a commodity, it goes retrograde, that's usually bearish for prices. And not only will you get at that station point, that gives you a change in trend in the market. When the planets change trend, the markets change trend. So we're going to look at now. Well, let's just look at these. I have 5 markets on here now. There I have cattle, I have copper, I have cotton, I have sugar, and I have wheat. Now you look at those markets. If I ask you, Larry, what do you think those markets have in common? You'd probably say not much, right?
No, I'd say they each have a picture of what they are on there. It looks pretty cool. A picture of a copper penny and a wheat chaff. I think that helps remind me what they are.
I mean in relation to each other.
No, yeah, you're right. Yeah, no relationship.
You don't see the cattle running around with a cotton T-shirt on. Right?
No, this is true.
Yeah. Anyway, but there is a connection here astrologically. They're all connected all associated with the planet Venus. I'm not going to go into why or how there. If the folks want to contact me, we can get into that, but you'll just have to take my word for it, okay? So let's go see. One of my principles here is, and I did it the way I did it here. This comes right out of my April letter where I review March. And so we have the big planetary event this month. This is back for March, in early March. Over the weekend of March the 3rd weekend, Venus, it was actually Saturday the 4th, Venus is the ruling planet for, and then so I didn't have to repeat the same thing, 5 times. I just left that blank, so fill in whatever market it is, these 5 markets. Usually when the ruling planet for commodity turns retrograde, it is bearish for prices. Watch for an important change in trend on as of March 6th. That was a Monday, okay? So let's go back and see how that worked. And in a few minutes, I'll show you how you can apply that to the future and possibly make some money. So now, as you were kind of alluding to earlier, it's a lot of the finding a good trade is about the setup. I would say setup is 50 to 75% of any trade. You got to have the right setup, right?
Yep.
So we'll be looking at these markets. Here's cattle. Here's that little red arrow there. That's the 6th of March. And we did get a little short-term top there, but it wasn't real great. You can see it wasn't particularly overbought there. We're looking for a reversal, so that would have been better if that happened over here, and you had a 3-4 day rally into our magic window, right? So that was not a great setup, but you could have made a little bit of money there. It went down for a day or two, Mm-hmm. All right, copper was not a good setup. It was just going down, so you probably would have taken a pass on that. Okay.
Do you have a rule, Norm? A question that someone's asked. Do you have a rule for your buy and sell points if they happen to be going in a downtrend? Because you do a really nice job with the channel lines. They're asking, do you ever trade in the direction of the channel lines? In other words, you only want to be buyer if we have higher bottoms, and only want to be a seller if you have lower tops. Because in cattle we were an uptrend, and copper we were in a downtrend. That's the question that they asked.
Well, the key is how it behaves just up to our key date, our change in trend date, right? So
okay.
If we're looking for a top, we want it to rally into that date, and then we're going to 75-80% of the time we're going to get a reversal there. Occasionally there's formations where you trade into a wedge or a triangle, and then now you're at an inflection point, and then you have to wait for a breakout one way or the other. And then I think you and I have the same bias. Don't like to buy, chase the market, right? So, but that's what you have to do in those, 10-15% of the situations. That's what you end up doing because you have to play the breakout, right?
Uh-huh.
I like to. I think you said before you like to buy low, sell high, that kind of thing. Buy low, sell.
In quantity, of course, in quantity.
Right, but buy wholesale, sell retail. Kind of, I feel like I'm kind of hardwired for that,
Sure.
All right, so let's move ahead now. Now we got some more markets here. Here's cotton. Look at this. Now here's cotton. His has a nice setup. Look at that. You have a nice rally for about a week or so into our magic time. And there, bang, we hit the high of the month. That's HOM there. It's the high of the month right there. You see that?
Yep, there's spot on.
There we go. Also, yep. And here's your sugar. It had a nice little, about a 4-day rally there into right there. There's our date. And bang, that's the high of the month. Okay.
Now, Norm, hold on the sugar because based on the patterns that we use is the we use this Gartley pattern where we use 61% retracement of weekly highs and lows, and we're setting at this 16 cents and change level in the July sugar at a major point. Is there something really big here that would make the sugar have a pretty good move?
Well, maybe maybe later in the month when I'm going to get to that. We got Venus is going to, these retrograde periods, for Mercury, it's about 21 days. Venus is, I think, let's see, we're looking at about 6 weeks, 5-6 weeks for Venus going retrograde. So that means we're going to come to a point where we go direct. I guess we got the music coming up.
We got a commercial. We got to pay some bills. Stay with us. Norm Winsky of Astro Trend.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're speaking with Norm Winsky from Astro Trend. Norm, you want to go ahead and continue?
Yes, sir. One last comment on the sugar. I didn't put the line on here, but it's pretty obvious. If you connect to these bottoms here from, mid-January through February, where it broke down through these bottoms at the when it was topping there, and you just extend that over, I think you'd land just about where the market rallied back to, which is classic technical trading, break down over here and late February, and then rallied back up to the old support, and it did that right on the Venus retrograde. That's a beautiful thing,
Yep. That retrograde,
Okay.
Now you use that quite a bit when you're doing the Bradley model, as I recall, that you use that as one of the filters for the Bradley model.
Oh, yeah. Well,
Is that correct?
these station points can invert the energy.
Uh-huh.
But I'm trying to stick to just one principle here, that
Okay.
this stuff, what's neat about these retrogrades are that not only can they give you a short-term turn in the market, they tend to have a longer-term effect on while that planet is retrograde. If that market starts going down, it'll probably go down for that most of that period.
Uh-huh.
That's kind of unique that way.
It really
So-
is, because, I studied that, not to the extent that you have, but the retrograde was always a very important thing with Dr. Ruth Miller, and I know you knew Dr. Ruth, but she was very, very big on the retrograde. And of course, especially with the inner planet, Venus and Mercury, she thought those were even more important. So go ahead. Didn't mean to interrupt.
So
Go
we're
ahead.
just going to move ahead now to one more market, wheat. I know you talk about wheat quite a bit. Look what happened here. We had about, 1, 2, 3, 4, 5, about a 6-day rally. And bang, right there. There's your Venus retrograde right there. It gave you the high of the month. I think most traders would like to be able to sell at the high of the month, right?
Yeah, that's good. It's better than selling at the high of the week.
Okay. Yeah, there you go. So anyway, that works very well. The reason I laid that all out is to show you that there's something to this maybe. And guess what? Now we're going to look at April. So April as you know, Larry, because you got my letter, is a crazy month. I don't ever remember a month like this in my 45 years of doing this sort of thing, We've got, here's the list here. We have 4 station points. 3 of them are all turning to turn retrograde, 3 out of 4. And tonight, the reason I wanted to come on your show today was because tonight is the first of these. Saturn is going to turn retrograde tonight. And then over the weekend, we have Mercury. It's going to turn retrograde. And then Monday night, you remember the Mercury retrograde and the moon, right, Larry? Uh-huh. In May of 2015. That was the high of the year. I'm not saying that this is going to be the same, but the fact that anytime it seems that anytime the moon lines up at one of these points, it becomes it's like supercharged, So we have Mercury.
In other words, we have a lot of things happening here coming in on May this weekend. Then with these retrograde planets.
Just in the next few days, yeah.
Okay,
Tonight
great.
And then the weekend into Monday the 10th, because Monday night, is the full moon, and over the weekend we'll have Mercury turning retrograde, right?
Uh-huh.
So this is really important. The moon and Mercury, I always talk about the moon and Mercury in particular for the grain. So that might be, I think you were looking maybe for a bottom there. This is the one exception to the rule on the retrograde, that the prices usually go down, but the grains are kind of an exception in that sometimes the grains will be, how to put it nicely, in the gutter, on scraping bottom there. And so then sometimes they'll go the go the opposite way, and make a bottom, But usually even when the markets are going down into the ruling planet retrograde, you'll get a temporary bounce, and then later on it'll go back down. It's just usually like a bear market bounce, Mm-hmm. All right, moving ahead, you asked me about Venus, sugar, wheat, so forth. A little while ago, and we do have on the 13th after the close. AC is after the close. That's what all these are. So they're happening overnight. Venus in Pisces turning direct there, so that's the opposite point from when Venus went retrograde, So watch for turns in all these markets. I just showed you around the 13th. That's a 3-day weekend, Larry. I don't know if you knew that or not.
Oh, sure, yeah.
We're off Friday the 14th.
Yeah, Good Friday. That's correct, yep.
Yep, I hope it's a good Friday, right? All right, there we go. So, and then 19th, we have Pluto turning retrograde. And these are the top. Oh, and here's, in the last few years, I've gotten keen on, I've known about this thing, but I just elevated it here in the last few years. When the planets get to zero latitude, what is zero latitude? As the planets go around the sun, they're like the horses on a carousel. They go around and around, but they also go up and down. See, like the horses on a carousel. So there's the 4 points there on that cycle that they oscillate up and down, and so there's a high point. There's that's maximum north, maximum south, and in the middle they hit the midpoint twice. That's zero latitude. So when they're going up, zero north latitude, that is called within 2 days the previous 2 tops on the stock market. We had one on Mars with zero north latitude on February 27th. I think your gold had a big turn there, right, Larry, on February 27th?
Yes, I believe it was right around that time, yes.
The stock market was, nobody wanted to play because Trump was going to speak on the 28th, I think, so everybody stayed on the sidelines. And then we had the big surge in the top, and for some indices, that's been the high, And then the mid-March high, that was Mercury at zero north latitude. And so I'm going to stick my neck out here now and say that I think when we get around the 25th of the month here, April, we should be on our lows. And guess what, Larry? This is going to get supercharged because almost simultaneously we have a new moon.
Wow, that's going to be some real powerful stuff, aren't it?
You betcha. So anyway, now you got what I think are the 5 top dates of the month using the planetary cycles, and there you go. So anyway, and I know when people first look at this, some of your new people there maybe look at this, go, wow, this is complicated. It's just new terminology. You have to learn, maybe 30 new terms and so forth. There's some new ideas, but once you get past that, I guarantee everybody, I promise everybody, this is not beyond the 5th grade level. I taught my kid this when he was in grade school, and anybody can learn this if he made it through grade school, Otherwise, I couldn't do it, right?
Yeah, right, Norm. Yeah, give me a break.
No, I'm serious. The
You
reason
have well, you got strong genetics. I mean, your uncle was one of the people that founded NASA. So don't talk to me about genetics.
Oh, that gene skipped over me, Larry.
Yeah, no, it didn't either. Don't start with me. So go ahead.
No, I'm serious. If you want to get into that, the reason that I'm doing this stuff is I had to go find some way to get smart because I knew that I just had average IQ. I'm not doing calculus. I can't do calculus.
Sure.
I got a kid who can do calculus, but not me. I had trouble getting through Algebra 1. Anyway, so I've got about 40, 45 years experience doing this stuff. I'm a former Chicago floor trader. I was on the CBOE and the board, traded on the Board of Trade and all that sort of thing as a CBOE member for 12 years. Risked my own money. I was a market maker, local on the Board of Trade, risked my own money. And so you can, here's the great deal. So for the next 5 days, the first 8 people who contact me will get a free, individualized, one-on-one free class that usually averages about 5 hours. And I do this on Skype. And you can learn. I'll try to cram about 40 years of my knowledge into about 5 hours. And you get my letter for free. So contact me here at, here's my phone number on the screen here. Make sure you contact me at this email and this phone, 239-594-3939, or Skype, norm.winski. It's my email, nwinski@inparkmail.com.
All right, my friend. Listen, thanks for joining us, Norm. Norm Winski of Astro Trends, and we'll talk to you soon, Norm.
Thanks a lot, Larry. Have a great day.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring to your attention that we are up against this really big, what I think, is resistance level. We've taken out that high of late March now at the 2366. We've reached the 61% retracement of the high from March 1st, and we're not quite at the 78% level of the other one, but we have taken that other level out. So I would watch that one very closely for a potential move to the downside. We're up about 100 and some points, 140 points in the Dow. So my guess is that we're pretty close to something really big happening in some of these things. So pay close attention up here, because this is that what we call the magical 2370 level in the SP. We get above 2375. I would have to think that this thing is probably got more legs to it, and we would have an ABCD structure that could take us up, to new high ground. Whether that happens or not, remains to be seen. The bond markets continue to move lower here. We're down now. We're down a little more than a point. Let me see, 51 to 52. We're down a little more than a full point down from the high that we made, and we still could be looking at a more corrective pattern here in the bonds. As we see now, gold went down and made the 78% retracement down there at that 1245 level. That was off the previous low. So far that is held, but anything below 1245 now would tell us that this market most probably wants to head to the downside. That's the way I would look at it from a technical perspective. So keep in mind, like we've tried to show you here, that some of these patterns work, some of them don't. They're all related on probabilities. The risk on these is somewhere between $300 and $400 on just about anything you trade, with the exception of gold and with the exception of crude oil, where you have to risk a little bit more because the volatility is so very, very great when you're dealing with those. So watch those carefully, and always try to protect yourself, with adequate risk, because those are the things that I think will get you to the promised land. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.